Are you tired of all the uneducated noise you're getting from the droves of YOLO meme coin peddling douchebag gurus out there trying to use you as their exit liquidity? Would you rather learn a competent university-level set of skills that will guide you in managing and investing for the rest of your life? Join us 3 days a week at Digital Investor. Develop your knowledge of game theory, cognitive bias, macroeconomics, monetary theory, investment theory, psychology of the crowds, and more. For more info on Digital Investor and how it can help you, reach out at nickblacknext.com.
Oh, wait a minute. I didn't do my little thing yet. Hold on. There we go. Much better. All right. Kitty just set up shop between my legs, between my shoes. Hi, kitty. The big kitty. Sometimes it's the little kitty, but today's the big kitty. He set up shop. So we're happy. Big kitty's happy. We're happy. Big kitty sad or angry or any other emotion other than happy. No one's happy. Hello, hello, hello. You may or may not notice like a beeping in the background. I'm simultaneously doing a leg workout. Have you guys seen these things? I know I used to talk about it on the Digital Investor show. Or not Digital Investor, the other show. These Compex. I'll show you. Here, let's see if you can see it. So what this is, let me see if I can pop it open without breaking it. It's got these leads that hook up. It's a muscle stem system. And that's like the head unit. You can take that piece out. I'm just putting it in there because it's easy to keep it quiet. And it's got 4 sets of 2 lead. I don't know what you call those, transmitters, receivers, diodes, whatever the hell you would call it. And you select for different body parts. You stick them on, they're sticky, right? And then you just go up to, it says, go to the intensity that is your maximum. So you just keep going up on it until you grit your teeth. And I'm doing the one for, it's got a bunch of different settings. It's got a stretch one. It's got a like balance and rehabilitation one. It's got one for blood flow. This is the one for muscle hypertrophy. Whew. It makes me sweat a little bit because it hurts so bad, but I guess it's good. And basically it's the same thing as working out because it's the electrical impulse that mimics the same thing that you do when you're working out. So you wouldn't use it in lieu of working out, but you would use it alongside working out. So Tuesdays is my leg day. Kitty. And since Tuesdays is leg day, then it makes sense that right after leg day to do this little sucker and get a second leg workout for free. Free leg workout. Woo woo. Anyway, yeah, it's pretty cool. It's called Compex if anybody wants them. Plus, also, if you're injured, it's a TENS device, but it's got a couple. It's more than just TENS. TENS is one form of that. We would need probably a chiropractor to properly explain what these Compex ones do, but they're the ones, all the Olympic athletes use them when they're on planes and all this kind of stuff to continue their workout routines when you can't, like if you're missing a workout or if you're injured, but you still want to get the muscle workout, like maybe you blew your knee out, but you still want to work your quads, your calves, your glute, all that. You can get one of these little guys and you can just keep working out. Woo woo. That's some cool stuff. Okay. Today I made a children's book for you guys called Yuki and the Yen Carry Trade. So we will also talk about the unwind of the yen carry trade and why that's causing so much damn chaos, and maybe one of the biggest macro chaos factors. And of course, it's loosely coupled with the nonsense at the Fed, or the no sense at the Fed. But yeah. Uh-oh. What happened? Oh, something happened. I don't know what happened. Maybe I wasn't allowed to close the box? I don't know. Did I go too intense? Am I over challenging the technology? I don't know. But it gave me like a red warning thing. Ooh. Don't get a red warning thing. So what it does also, it measures your muscles. It does its own little testing. And if you screw up, it won't let you kill yourself. I think. I don't think it will let you kill yourself. I don't think. All right. Let's see. I emailed support about this yesterday. Don't know if they can help. Probably on my end. I completely shut down clean class shade cookies. I don't know what that's in reference to. I feel like that's out of context. I'm not sure. I'm not sure what to say. All right. So yeah, we're going to talk about the yen carry trade and all the effing chaos that unwind has caused. We did talk about it a little bit yesterday, but not in any depth. And I want you guys to understand it, because if it completely unwinds, which it looks like it's completely unwinding, and it spells the end of the old, which that's been around for quite a while. But anyway, it won't make any sense until I explain it. So there you go. Okay. Is compact unit wireless? Yes. That's it. And it's working right now. I'm doing my legs. So it's working right now. All right. Put that guy back there. Oh, let me get to where. Oh, maybe it was saying that I went too much. Maybe when I touched the buttons, I went up by too much. Because it says adjust to get visible muscle twitches. I'll do that. And then it says increase intensity to your maximum. I always go to where I can barely hold my breath. All right. Anyway. Can't log into DI. Yeah, that's a Brandon thing. But if you clean your cache and cookies and all that, that doesn't change the fact that your password is your password. Like whatever your login information is, that's still your login information. That clearing your cache and your cookies and all that doesn't clear out unless you never knew it or you forgot it, in which case one must endeavor to reset it. That's probably what you're going for. Anyway, can it be used on a plane? Yes, it can be used on a plane, and it's legal to like travel with and all that. So you're good there. Oh, that's a good one. That's a good one. Woo. Yep. So anyway, yes, can be used on a plane. Awesome. Okay. So we'll move forward. We'll take a look at markets. Yesterday, behind the wall, we talked a little bit about some of the moves that we had made over the weekend in the chaos. So, we won't in a public-facing venue such as this get into that kind of stuff, but we can talk around it a little bit. So that's kind of fun. All right. If you have any crypto-related questions, let's keep them 10,000 foot and vague enough that it's not like, should I buy this? Should I sell this? Because I ain't going to answer. And I don't think it would matter anyway. You got all these morons like BitBoy Crypto and all this kind of stuff that just straight up break the law and they never get in trouble. But we're going to avoid breaking the law, even though you probably still don't get in trouble. Thanks, Shiza, for that. All right. Let's see. Haven't heard from Brandon. I've loaded this both from DI site and from YouTube directly, no matter, lasts for maybe 1 minute. Then that's not us thing. That's probably a you thing. The technical help you may need is probably not Brandon. I don't know if Brandon can help you with your computer. That may be more general computer help. But if everything goes away in after 1 minute, that's not an us thing or a Brandon thing. That's a Bill, that's a Bill thing. Let's see. Okay, let's move along a little bit. I had reset the show, not reset it, but I had adjusted. I had originally done the title wrong, so I retitled it. Bam. Yeah, it's the same way. Like if you can't get into your car, if your laptop, if you watch Digital Investor on your laptop and your laptop's in your car and your key fob battery is low and you can't get into your car, we can't help you with that. There's some things that even we can't do. I know it sounds cray-cray, but there you go. I talked to the people at CryptoRank. It's kind of cool. This kind of site, CryptoRank. And they rank new projects. They rank hedge funds. They rank all sorts of stuff. So we may do some kind of partnership deal, whatever, with them. Marketing thing. What are you doing, Kitty? We may do some kind of marketing thing with them where some of those companies come over and list their assets so that their insiders can move in and out of those assets without hurting the market price, which is, again, that's kind of the whole cool point, is wallet-to-wallet transactions, code-based, without a bunch of jerk-offs in the middle to steal your stuff. So that will be cool. If we can get that going, that's going to be really cool. So I'm going to connect. They're going to send me some stuff, then I'm going to connect Brandon with them and all that. Yeah. So, and there. So that's cool. So that could add a new kind of line of clients that would be utilizing Node Market. So for you NFT holders, woo-woo. I talked to the Twin team last night. I believe we will, I mean, again, they've already given me a tentative date, but I can't repeat that tentative date until they confirm that tentative date. And they're waiting on final audits, code audits on their token. So when the token is audited, the announcement will happen. And I can tell you they are fighting like hell to make it be this month. So they're really just waiting on audits. And then, yeah, so that's that. Okay, yay. So there's almost information there for you. There's some almost information. Anyway, great. All right. Who is Night Owl? Never heard of you. Oh, dear God, man. That's Brandon. That is Brandon, buddy. When you emailed him, you actually wrote that in the email. That was the email that you. Dear God. All right. Let's take a look at markets. Knock out, fire off some questions. If you've got some questions, you can fire them off. Says show in 24 hours. Well, that's the Wednesday show. That is accurate. Okay. You guys understand how this works. Mondays, Wednesdays, and Fridays. That is the Digital Investor Show. Tuesdays and Thursdays, that is office hours. Okay. And Saturday, that is the private stream for the digital private clients. Okay. All the weekday shows are at 8 a.m. Pacific time. Okay. You boys got that? Large Coke, pie, coffee? And the Saturday stream for the digital private clients is 8:30. Okay. So that's where we are at. Does everybody understand the timing moving forward? Yes. I think we've nailed that. I think we did it. Kitty's happy. Kitty's happy. I'm happy, buddy. That's how it works. We're going to bust this intensity up. Why would we get why do we want to go lower intensity for the cool down when we could be going higher intensity? You know what I'm saying? We're cooling up. When is my special class? That's whenever the short yellow bus arrives down the street and your mom walks you out there with your helmet and your mouthpiece. All right. What did you see last week that you called the Sunday, Monday crypto bloodbath? Well, kind of a bunch of things. When Bitcoin got pushed off of 70K, I thought that was probably a bad sign. When Trump got when the election hopes and Bitcoin hopes for a few days got kind of intermingled, I thought that was a bad sign. Of course, that unwound. This end of this Japanese carry trade started happening, but it was really obvious when the data started coming in and the Fed didn't react. And I just thought, oh God. And we knew they weren't going to react, but somehow you thought like, they've got to be smarter than regular people. The people at the Fed can't really be this stupid. Like laughably, like in your face stupid. Like you're okay with, like I say sometimes about Janet Yellen, like she's a classically trained economist with econometric models that she follows, and they follow them in both directions. And they say, if Y goes up, X goes down. Therefore, if X goes down, Y goes up. Therefore, and then they try to manage the entire economy off the Phillips curve, which is not even a curve. But I get it because they were born in 1940 and they went to school in 1960, and a bunch of Ivy League a-holes glad-handing each other. And it is what it is. And then whenever they're wrong, which is all the time, they put up a bunch of counterfactual arguments and they say, well, it would have been worse if we hadn't done X, Y, Z. Well, I guess we'll never know, Janet, Ben. All these people that screw up the economy, they always say, well, it would have been worse. Well, I guess we'll never know. Anyway, I still thought they can't. I mean, Jerome can't be this dumb, this thick. And sure enough, we saw that he was that thick. And then we got so Wednesday came the thickness. That sounds like a porn movie. Wednesday came the thickness. Ugh. You almost need to wash the screen off after that. So Wednesday, the dumb Fed posturing. Thursday, the bad information starts coming. The yen trade starts unwinding. It all started to kind of melt together. And I was like, ugh, this is going to be bad. But bad is good for us because bad is good for, it's the other bad is good. Bad is good for the stock market because it means a bunch of boobs are going to get lower interest rate stimmies, which is not that, but whatever. Uh-oh, sorry. Let me get it to quit singing. Stop singing. Stop. Stop your singing. See, ooh, this is interesting. It lets you go through and select. I didn't notice this before. I've used this thing a bunch, but I guess I toggle through it so quickly. It shows the placement of the leads. That's valuable. Huh. It gives you a little picture and shows you where each lead goes. Oh, look at me learning. Anyway, so that's what led me to believe that we were going to get whacked in the markets. And for us, getting whacked in the markets is a good thing because it gives us opportunities to buy assets that we think maybe we got left behind on, we missed, or you're trying to rebalance your portfolio, whatever, what have you. Matter of fact, let me go ahead and as we do this, let me switch over to markets and we can take a look while we're having a discussion. Okay. Now that hey, listen, we're over 2 trillion. That's good. Get over that 2 trill. Looked bad when we were under, but we're still not going to be in a bull market until we're at 3. I don't think. I think that argument, we can put that argument to bed, right? Like we're past that. We all get it that we're not and haven't been in a bull market. Okay, cool. All right. Why does everyone still take marching orders as the Fed if they don't matter? It's crazy. That is an amazing question. Joseph, I ask myself this every day. I ask to myself, why? Why do we listen, Fed? Why do we listen, Fed, if they're a bunch of idiots that don't know nothing? I don't know. Я не знаю. Почему? That's my Russian accent. All right. So why people listen to the Fed is because most of your money managers, fund managers, asset managers grew up old school, or the new people they're hiring, they're teaching them old school. It's the same as the Janet Yellen thing. It's the octogenarian problem. It's that they grew up in a black and white world of econometric models in paper books written by other people that have never been in the economy. You can't have people managing the economy that have never run a business, that have never failed, they've never anything. They went right from school into some weird job, into some very nebulous, very specific, microscopically tiny, narrow ass field in economics and finance or teaching. And they never actually did any economying. They're not entrepreneurs. They're not they've just never done business. So they don't understand business. You can't read a 1960s tome on economics and then go into the world the way it is now and have any clue what's going on. It is just far too complex. There's too many moving pieces. Remember, this crap wasn't just written before smartphones. It was written before phones. Like, it was written before cell phones. So they're on 60 to 80-year-old economic models and theory. And not only are the people managing, but so too are the people, some of the older people that have a lot of money that are investing. So you have like this cohort of people that none of them know what's going on, and they have this old belief system. And the belief system is don't fight the Fed. The Fed's all powerful, blah, 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 which we know is bullcrap. It was made abundantly clear. If anybody, even the same people that believe in the Fed and that read the Fed minutes out loud on CNBC don't understand what they're reading, I guess. Because if they had been reading Fed minutes and they had been actually, like looking at the beige book really over the last 20, 30 years, everybody has told you that they don't know what they're doing. They've said, even Bernanke, who lies all the time, who has completely recreated the events of his tenure. He got a Nobel Prize for how well he handled subprime. Remember, this is the guy that 3 months before the total collapse of the whole fucking planet, he said subprime is contained. That guy got a fucking Nobel Prize. It is beyond mind-boggling that this tiny group, and you know who handed it to him? A bunch of other octogenarian assholes like himself. So it's like the Emmys. Who gets an Emmy? People that are voted on by other people that got Emmys. And nothing we have to say about it. So you have to factor that this is I would say the good old boys, but now we have to say the good old them, because that's not diversity, inclusivity minded. DI. It's not DI, digital investor minded. What? Anyway, so long story short is everybody believes this stuff because they choose to believe it because it's easier than doing the work. And some people get to a point, many of you may have experienced this, like when you're in a job and a new manager comes in or something, you're like, I don't want to go relearn someone else's system. So it's a little bit of that. It's a lot of cognitive bias. It's a very poor understanding of game theory, or just no understanding of game theory whatsoever. That's most of it. It's intellectual laziness and bad math. And I know a guy who I see him every week. He comes over and eats dinner, hedge fund guy. And he's got a fair amount of money under him. I don't know, maybe 100 million. And maybe more. I don't know. I haven't asked him. That's kind of like being in the men's bathroom and like looking over in the other urinal. You don't do it. So I haven't asked him how much he manages, but he manages a fair amount. And he's like, don't fight the Fed. I go, why? They don't do anything. He goes, yeah, but. And like I had to have, and this is a guy who's been in the business, like he's been in the bond market since like the late 60s. Like he was like a legit on the floor bond trader, old school, like white knuckle, bloody. Like this dude's seen everything, every major crash, he's everything. And he's like, well, there's money. And I was like, and so I've had these discussions with him, and I don't know if it gets through. And then there's a point where you just say, let him be stupid. If it's anybody here read Gorky Park, it's pretty cool. story. There's actually 2 or 3 in the series. Anyway, it's about a Russian detective in Moskva. And anyway, there's a part in it that basically says people will rather believe a lie if the lie embodies, like, it provides them with hope, because the truth is basically hopelessness, right? So people would rather believe the lie of the Fed. They'd rather think that there's an all-knowing, all-powerful Fed that can flick switches and fix problems. And now it's a reaction function. Now it's like, even though that there's plenty of scholarship that shows, well, plenty, all data shows that Fed interest rate raises, hikes, and when they cut interest rates, it makes no difference in the economy, especially makes no difference to inflation. Most times inflation goes the other direction. Like, it's completely not, it's Kramer correlated. And so, but people know that I guess the belief is that other people believe. So there's a big pile of people that know it's stupid, and then a pile of people that believe that it's probably stupid, but that other people believe that it's not stupid, and they're gambling on the other people. So it's, what would dummies do if dummies were thinking, what would other dummier dummies do? I don't know what that WWDD, WWD, DWD, WD-40. It's ridiculous. And if you ask a banker, this is great. Ask anybody in banking what the Fed does. Oh, they change short-term interest rates. Okay, why? To price stability and maximum employment. Right, but then why did they just have a speech about too much employment? Because of interest rates. Why? They can't tell you. All they do is regurgitate like a dumb little bird. Everybody keeps saying interest rates. Okay, but why? Why would cutting interest rates, if we know that the yield curve is a measure, but with real people and real money, of growth and inflation expectations, why would cutting that somehow reduce tension in the markets, be less restrictive? Less restrictive is when rates go up and people are investing and economies are booming and entrepreneurs are entrepreneuring. So why would going the other way somehow be opposite to the other? Like, why would taking gas away from a fire make it go up? Well, it's less restrictive. But so it's so flawed and counterintuitive that people refuse to just do the work. They just buy into it. They bought into the Fed stuff for a while, and none of them actually know what happens. They don't even know. Matter of fact, most people, Joseph, don't even know that the Fed doesn't deal in money. Not $1. None. Zero. They deal in, well, let me be specific. They don't deal in U.S. currency. They do swaps of bank reserves, and they adjust a short-term money rate. Okay? All that financing is through the Treasury. The Federal Reserve isn't dealing in currency units. They deal in professional performance theater. And the idea is, it's like a reverse reaction function. The idea is, if the Fed says something and you believe that they can do what they say they can do, you'll start behaving accordingly, which will create the outcome that the Fed says that they say they can do, when they're not doing anything. And then you will do it for them, and they'll step in and take credit. See what we've done? You didn't do anything. That's right. You did it. But we made you do it by saying we would do it. That's how we do it. What? So you would think that eventually this reliance on the Fed, and it erodes every time they make a blunder. A blunder. It's all blunders. But as the continuing blunders mount, the Fed looks less and less capable, more and more stupid. The Fed, you guys know that before like 2000, really, I would say let's go back before the 80s. Because remember that a lot of the myth and legend and lore of the Fed was because of the great inflation of the 80s and all that kind of stuff. And like how the Fed tackled it. They didn't tackle anything. They were just guessing in every direction, throwing crap against the wall and seeing what would stick. The Fed was a joke, like a joke, the laughing stock of the financial community. Like since like the 1930s. Well, I think you go back to what, 1913, something like that, all the way forward until the 90s when they rewrote the story of the 80s. But the Fed was a joke. No one believed anything the Fed had to say. And it was just it was like the little kid at a birthday party with his pants down. You're like, just don't look at him. Just don't look at him and he'll go away. He'll stop, or his parents will come and get him. But like they were a joke, and they were made fun of like frequently, like by media and they just retooled, they remarketed what happened in the 80s as if they had some control over the great inflation and wrestling inflation, which they did not. Because economies go in cycles, right? Like think about it. Things start to get good. People start to spend. They get jubilant. They get excited. They get paid more. They spend more. They start using credit cards. They start living that good life. They start taking a little bit more risk, a little bit more risk, a little bit more risk. They get exposed a little bit. People start getting clipped. They took too much risk. They took on too much leverage. Some people start getting blown up. People are over their skis on their credit. They owe a bunch of money. They bought stuff they probably shouldn't have that they can't afford. Now the economy starts to come back down. Things start to tighten. Bad businesses start to go broke and go bad because they overhired, overexpensed, over whatever. They overed. Then the belt has to tighten. Austerity kicks in. Crap. Maybe it's forced austerity. Maybe it's government mandated austerity. But the problem was, so that this is natural, right? That's a natural kind of cycle of human behavior. When you come in when the curve goes down and we're going into recession, closing in on a depression, perhaps, this idea that you can take fake money and paper over the curve so that let's just whack out the bottom of this curve. Matter of fact, let's give a bunch of money to companies that don't deserve it. Let's bail out a bunch of businesses that really should go bankrupt because they're borderline corrupt. Let's give them some money. Let's give them a lot of money. Let's not really check on it. Let's just let them do whatever because they're clearly good with money. I mean, that's why they're bankrupt. So we should bail them out because all they really need is just more money. I mean, you guys know whenever you have a cousin or an uncle or a friend that comes to you and needs money, it's not because they're bad with money. It's because, just bad luck. If you give them more money, all their problems will be solved. They'll never come back to you again, right? Everything will be fine. So you can't print prosperity, right? Off of a printer. You can goose it in the short end for a few minutes to a few hours to a few days. But at some point you can't. It's kind of like if you're driving on a mountain and you don't have brakes, it's not a problem when you're going uphill. You can haul ass. You can hammer it. Everything's fine. Everything's fine. The brake light, just unscrew it. The low oil light, unscrew it. It's not important. When you crest the hill and you start coming down, you can unplug every goddamn light if you want to. You can put duct tape over the whole dashboard. On the way down with no brakes and no oil, you're in trouble. So it doesn't matter what you say or stipulate or mandate, you're in trouble and a crash is coming. You can't paper over that. So it's just this idea of being able to hit the play button on the printer and then everything's fine is a pretty nonsensical way. Yeah, Greenspan was God. Alan Greenspan wasn't even a fan. He wasn't even sold on moving around interest rates. He basically is like, I'm just not so sure this works. He said something to the effect of like, I'm not completely convinced but what was the choice? Just disband the Fed? That's all they do. They don't have any power. And it's a private group of banks. It's not even a federal agency. That's what's so weird about it. It's no more federal than FedEx or Taco Bell. Yeah. Anyway. So yeah, that, I guess. How did you pay for the pool? Second. Oh, yeah, that's right. Yeah, exactly. So anyway, let's look at, before we get into, because I did a fun thing today. I made a children's book for you guys. Yuki and the yen carry trade. I'm very proud of myself. Now, because I didn't take a lot of time on the artwork, it's not, there's not a lot of continuity in the artwork, but there's a basic theme. There's a basic theme that I think you'll appreciate. And by the way, when is the last time you guys learned finance through a children's book? And your star's name was Yuki. Probably this will be a first. And then I'll actually go back and explain the yen carry trade to real adults. I went into 20,000 homes over 36 years. Jeesh. And yeah, leverage is not good. God, leverage destroys. It was over, I think, what were the numbers? $1 billion? Something like $1 billion in leverage unwound over the weekend. And look, the markets are down. We're at 2 trillion. So we lost $500 billion in about 2 weeks. That's a lot. And there are still idiots getting unwound, various degrees of unwinding. There are people right now taking on leverage. I mean, we showed it yesterday. There was the one idiot that got melted for, what was it, 27 million in one trade or in one position? 27 million. I don't care how rich you are. That hurts. It hurts bad. Somebody else for about 15 or 16 million the other way. Like right after that, like gamblers gonna gamble. And I guess it's no different than people gambling in Vegas, like these high money Baccarat guys. But geesh, man. Geesh. Yeah, that's right. But see, the irrational exuberance speech wasn't, if you go read that, I would challenge you, go read that, Joseph, the irrational exuberance speech. It's not directly about the stock market. There's a lot more to it. It's funny because those Fed chiefs are usually, they're pretty sharp they don't get to that position being idiots. Now they may believe in fairy tales and things like that, but they're usually somewhat sharp. I don't know. It's weird. I have a hard time calling them stupid, and yet they do stupid things. But a lot of that is politicking and kind of catering to your caucus and all that kind of stuff. I said caucus. Get your dirty mind out of the gutters. But yeah, the irrational exuberance speech wasn't really about stock prices. It was kind of a behavioral analysis. Anyway, it's kind of interesting. If you go read it again, it resonates different now. I say that. Yeah, keeping up with the Joneses. That's for sure. All right. Okay. Looking just briefly, 10,000 feet, Bitcoin recovered somewhat, still down 16% on the week, still up 92, 93% on the year. It's not bad. And that the alternative assets, the altcoins, haven't really done anything because for the most part, other than AI assets, these assets have all kind of underperformed Bitcoin. The alarming underperformance to me is Ethereum. So we are having our MT Gox moment with Ethereum because of jump trading and the crooks over there. And I'm sure the indictments start to roll in pretty soon, not having to do with the dump over the weekend. They just did that because they're either idiots or they're jerks. No, but the dump over the weekend is because they're converting to all stable coins. They're getting out of investing, basically. They what they probably did? They probably looked and said, look at the crooks over at Tether. Look how much money they're printing, like literally printing out of thin air because there's no checks and balances and it's all funny money corruption. I mean, it's just counterfeiting, straight counterfeiting 101. And no one seems to care, which is fine, but that's why I won't hold Tether for more than about 13 milliseconds. But maybe the people at Jump just said, hey, before all of our senior staff goes to prison, why don't we convert to stable coins and just run a stablecoin job? Let's just do a stablecoin business. So maybe that's what they're doing. But anyway, they're getting out of trading. They're getting out of crypto is what it looks like, other than stable coins. So liquidating most everything, and on as many exchanges as will accept them, and they don't care how hard they hurt the market. And who knows, if they think they're all going to jail, then maybe that's why this is what it is, right? Like maybe they're like, well, we're going to prison anyway. What's the difference? F you. I don't know. So Ethereum's getting beat up. Bitcoin's going to get beat up. It got beat up. And again, I think as the price comes down, it makes people want to sell more. So if I'm sitting there waiting for my MT Gox coins and they showed up in my Kraken account and Bitcoin was 67,000 and then 68,000, 69,000 and 70,000. And I still can't get my coins because Kraken won't let me access, or I don't have the right security settings or some bullshit, I would be pissed, man. And I start watching Bitcoin go from 70,000, 69, 68, 67, 66, 65, 64, 63, 62, 61, 60, 59, 58, 57, 56, 55, fuck, 54, 53, 52, 51, 50, 49, fuck you. I'm out. Right? So my guess is this whole washout that we had, this had nothing to do with MT Gox. But if I was an MT Gox holder, I would be done. I would be finished. I'm out. The second I get my Bitcoin, I'm selling that shit. Now, I might reinvest some of it, maybe in Ethereum or whatever. But you know what? I'm out. I'm not going to watch it collapse another 30%. No thanks. Nope. And who knows? Maybe Kraken did this whole security swashbuckle so that they could see who was trying to sell and what kind of selling pressure they're going to have so that they can adjust around that. Maybe they're just being uber safe. I don't know, but it does seem weird to me. All right. Anyway, so that's what's going on there. You can look, everything else is kind of moderately melting back. We got a good little rebound, but it was a rebound from the worst couple of days yet. I know, right, Jungle? Isn't that shady as crap? Doesn't it just seem like shit, man? You've been waiting a decade for your MT Gox coins. Like, let me sell my shit, man. God damn. By the way, I don't have any MT Gox coins. I was in the space when that happened. I told you guys this. I was at a hackathon with my buddies, and then we got back, and that funny enough, at the hackathon, our project was an ETF that had a basket of like the top 12 crypto assets, and it would reshuffle. It would reshuffle every couple of days or something like that. And that was our cool thing. And everybody's like, you're never going to get an ETF. We're like, what are you talking about? Yeah, it'll be easy. They're like, no, never. And then we're like, well, we'll make a coin that is an ETF and all this kind of stuff. So like, that's an ICO. That's oh God. Okay, whatever. Anyway. So basically people told us we were stupid, and we ended up just abandoning the project. But 3 days later, MT Gox. So we were like, ugh. And then, so if I had been waiting a decade to sell my tokens and I saw Bitcoin collapse and then they're doing this security crap, I'm like, dude, I am out. I will leave, and Zafira will be quite pleased. So anyway, now the Germans are like, ha ha, we told you, we screw you, and then we told you Bitcoin's a scamming. Anyway, crap. We can't Shiza talk the Germans right now because technically they got out higher than, well, it was about this price. So same. I'm curious to see what the total aggregate exit was for the Germans, probably somewhere around 60K when you know, all said and done. We'll see. Bang the bullets. I'm not looking at anything specific right now. I had my finger on the trigger when this Filecoin was down at $3. There was some discounts to be had. Render, again, it's a spammy coin, but it was under $4. Optimism was teetering around like $1.10, $1.09. Amazing. there was some deals to be had, not on any of this junk here, not on this dumpster stuff. Dumpster juice, we'll call it. What else was good? There was, Store J. Store J was juicy. It was, I think I was starting to snatch some of that over the weekend at like 31 cents. Delicious. And again, none of these assets, because I follow these assets doesn't mean that these are specifically anything that you need to follow. Definitely, this is not advice to purchase or anything like that. You guys got to do whatever makes sense to you. But these are things that I follow either because I want to own them or because they're an interesting way at looking at the market. Like I follow these privacy coins because I'm interested in what privacy token activity gets. I'm always curious, like, why would people buy into privacy tokens when that seems like low hanging fruit for regulators and like departments of justices and things like that. I would not own. Okay, hush now. Let me turn this guy off. He's been a dick. Hush now. You go to bed. Okay. She's asleepy. So let's switch gears. Let's get away from markets. Great. Some things melted down. Let me see. Weren't other exchanges distributing BTC? Yes. But we haven't seen whether those things have been released or not. We don't have a lot of data on MTGOX tokens. We just don't. Everybody's like, oh, it's done. It's not done. I don't think it's even started. And until we see that, and until it's kind of like jump unloading their Ethereum, that's fine. They're unloading all the time, whatever. I don't think that's a big deal. I think that gets eaten up pretty quickly. I think that MTGOX has got to be sorted out, or at least we have to know. It needs to be a known unknown, right? Right now it's an unknown. The only thing we know is how many tokens are going out. The unknown is at what price and where and how many will people sell that have been waiting around for a decade. We don't know. It's just that this kind of price action makes it more likely that people would sell than hold. If the price looks like it's going down, are you going to sit on your Bitcoin? Here, there's 140 of us in here. If you see the price go from 70,000 to 49,000 in 4 days, in 5 days, are you more inclined to sit on it or exit? And Jungle, you're right. Render does get bundled into AI, even though it's not AI at all. But it's a what would dummies do trade. And yeah, I picked some up under $4 because what would dummies do? It's like, at the end of the day, do you guys want to be right or do you want to be rich? Be rich, man. Just be rich. Okay. I would exit. You would sit on it if you saw the price get melted from 70,000 to 49,000 in 5 days. You would sit. Hey, you would sit. She would sit. Diamond hands here, fellas. Sit on it and buy more. No, you wouldn't, Philip. You would not, Philip. I know you better than that. Listen, you guys, you can say what you want, but human psychology is human psychology. You got all your Bitcoin back from MTGOX. Howard, you weren't in Bitcoin. You weren't in the crypto market in 2014. You shut your mouth. You shut your dirty fingers. Anyway, hey, whatever you guys say you would do, I guess we'll see. We'll get to see it play out. So we'll have good data on all of this. I've been in the market a long time. My brother has been in the crypto market since there was crypto, since Bitcoin, mining, before there was anything. And I can tell you what I would do. I would be out. See you later, bye. Oh, no, you weren't. Howard was fishing. Howard was fishing when Bitcoin was mining. 2014. Get off the gas, Howard. You don't know. You don't even know what Magic the Gathering online is. You're not a Magic the Gathering player. I don't want to hear it. Do your push-ups, eat your fish. Do you exit Bitcoin at 49? Would I exit Bitcoin at 49? No. What I would do is I would exit. I would thoughtfully exit. But remember, put yourself in the position of someone that's been sitting on money for a decade that they have not given to you, that they've been promising you for a decade? Has anybody been promising you something for like a few months and you're like, oh, come on? How about waiting for Christmas for 10 flipping years? Anybody? 10 years? Man, I'm opening my package. That's it. I'm ripping the paper off. I'm not saving it. I'm not saving the bow. F you. If you took a lot of time making the bow, it was wasted effort. I don't care. I'm ripping open the package. The cash is going in my bank account and I'm YOLOing. I'm living my best life. What? Anyway, there's that. So, okay, here we go. Now there's the real Phil. Sell half, pay off on my debt, hold on to the rest. All right, and maybe add a Ferrari, Phil. Maybe a Lambo. Maybe throw a Revuelto in that garage of yours, buddy. Move the table saw and the planer and the jigsaw. Move those over to the side. Put a little drape on them. Put woodworking off to the side. Throw that Revuelto in there. Maybe put a lift in there. So you can put that back in the child safe Volvo. Phil, am I clicking all the buttons? Are you picking up what I'm laying down? Anyway, I don't know. We'll see. We've been waiting on this. We've been waiting on the market since 20,202. Dude, we've been waiting since the future. Time traveler. Yeah, bunker. God, I know, right? Okay, so let's switch gears. We get it. We get that markets are in a weird place. It's also the summer. It's also the time that people typically back off of equities trading. Also, the equity markets are getting wrecked. And a lot of it can be reduced to this carry trade, which a lot of people don't kind of really know how to frame. They hear it, oh, carry trade thing. So I think we should talk about it so that we are the smartest kids at the water cooler. Or at least we understand for our own edification, right? So let's make a couple of musical choice switch. Let's go. I like Miami. Miami's good. This one's good too, though. Yeah, that's a good. We're gonna go that. We're gonna go in that direction. All right, buckle up, kids.
You're bad at math, but I'm giving you an A+ in confidence.
Just doing what I gotta do.
Extra credit.
Oh yeah.
Hello. You're late.
Okay, let me see if I can get. I made this cool little children's book thing. Why is it being so weird? Something to do with an update I did in StreamYard. Let me see if I can get this sucker to work. Oh, you know what it is? I wonder if I put too much artwork. I was doing the artwork in GPT, and I wonder if the artwork is jacking everything up. Anyway, don't worry. Yen and the carry trade story is about to begin. If I can get it to... God, it keeps freezing. Okay, you know what? Here's what I'm going to do. Force quit. ChatGPT. FU. And I always have a backup plan. I can go off my phone, fellas. Do not worry. Bam! It's not freezing on my phone, so maybe I need to do an update on the Mac. I don't know. Anyway, if I can get this right. This is so stupid. Today, let's go to Miami. We are going to, first, I'm going to tell you the story of Yuki and the carry trade. Once upon a time, in a land called Financia. Anybody here from Financia? Any of you been there? It's amazing. In a land called Financia, there lived a curious little girl named Yuki. Yuki loved learning about money and dreamed of becoming a financial wizard. Not like Janet Yellen. Okay, so this is, you'll notice this is whimsical. She's whimsical. A whimsical landscape with castles and coins and Yuki reading a book about finance. I guess it says Yuki. It's kind of Yuki. It looks like, anyway, that's Yuki, and that's a book about finance, and she wants to be a financial wizard. One day, Yuki stumbled upon a mysterious machine called the Magic Money Machine. We like magic money machines. It could borrow money cheaply in Yuki's home currency, the yen. You guys haven't figured out Yuki is Japanese. It could borrow money cheaply in Yuki's home currency, the yen, and use it to make money elsewhere in other currencies that weren't the yen. What? And notice, Yuki is now standing in front of a steampunk-style machine with a giant yen symbol. That's a yen symbol, okay? Look at the colorful gears and levers. That's a magic money machine. All right. Moving on. God, I should print this. This is good stuff. Now, the magic money machine works like this. It borrows yen from the land of low rates, where borrowing is almost free, and it invests it in places where money could grow faster, like the land of higher rates, which also smells a lot like the United States. Yay. Now, here, I'll turn the page. Page turn. Yuki watched as the money machine worked its magic. It took yen from the Bank of Japan, where interest rates were very, very low. And Yuki liked that. And turned it into gold in faraway lands like the US of A. And Yuki really liked that. Look how Yuki is happy as F. Look how effing happy. Look, Yuki's so happy. She got so much gold, her little pail, it's like a sad face because it's like, oh, look at all this gold I have to carry. Anyway, Yuki happy. Yuki's bag not happy, but Yuki happy. Okay. One day, though, the Bank of Japan decided to raise its interest rates because it's filled with people that don't understand economics or money or currency or fucking math. Sorry. Suddenly, the cost of borrowing yen started to rise. Why? Because that pile of octogenarian fools at the Bank of Japan raised its interest rates into a recession, which you might call suicidally stupid. Anyway, since the cost of borrowing yens had started to rise, the magic money machine began to shake and wobble. You don't want magic money machines wobbling and sparks and shit shooting out of it. You can't, listen, gears, they're all important. Every gear, and if you see sparks, that's bad, man. That's bad. Pipe down, Howard. This is a children's book for adults. Oh no, cried Yuki with with her own kind of like haunch. If you're Yuki, that's a cuss word. Haunch. Go haunch yourself, she said. Haunch you, haunch you. Haunch, cried Yuki. The machine is unwinding. Investors rush to sell their magical assets to pay back their yen loans in the land of US of A's. Investors are rushing. They're selling their assets. They're paying back their yen loans. The markets were in a tizzy. I don't know what a tizzy is, but that's what it put. I think a tizzy is when Yuki cries haunch. I don't know, but that's what it told me to read. A tizzy. The yen grew stronger and stronger as everyone wanted to buy it back. This made it harder for Yuki's friends, the Japanese exporters, to sell their goods to other lands. It also made a bunch of financial institutions unwind because they had been doing this free trade for so long that they had taken a bunch of leverage and debt and derivative exposure to this same markets that they created that they knew was all based on funny money. And Yuki tried to explain this, but Yuki's crying. Yuki's just telling everyone to go haunch themselves at this point. Anyway, it was very hard for Yuki's friends, these exporters, to sell their goods to other lands. This is exporters are in a bad spot. They're in a bad way. All right. Next page. The magic money machine, now destroyed and unwinding, has taught Yuki an important lesson. In the world of finance, things can change very quickly, and it always is prudent and wise to be prepared for surprises. Like, when your funny money machine breaks. And so Yuki continued her journey. She continued her journey ready to become the wisest finance wizard. She told those old bankers to go haunch themselves. She wanted to be the best financial wizard in all of Financia, even better than Jerome Powell and Janet Yellen if they got together and had a chimera baby. Yes. And always remember the lessons that Yuki learned when the magic money machine haunched everyone. Remember, young adventurers, future financial wizards, there is a lot of magic in the world of finance. Magic in finance rhymes with bullshit. Don't go haunt yourself. You're welcome. Okay. Did everybody get that? Does everybody kind of get the carry trade? If not, let me go through it in a way, because you guys do need to understand this. So let me unwind this in a little bit more better way. Good use of time. What do you mean good use of time, Barry? I just caught you the carry trade in a way you could understand it. Barry, you got better things to do, Barry. Where you got to be right now? You ain't got to be at work. If you are at work and you're listening to the show and you normally listen to the show, then you're not doing much work anyway. You're not being productive. I don't want to hear it. All right. Recently, the Bank of Japan raised its interest rates for the first time in years, and that had surprised a bunch of investors. One, because it goes against everything that everybody lies about knowing about economics. The change came amid expectations of rate cuts from the Federal Reserve due to slowing economic growth, which leads to a narrowing interest rate differential between the yen and other country currencies. So the scenario makes the yen, it makes the yen more attractive typically and prompts investors to unwind their carry trades, right? So if the yen can be borrowed at zero, and then you can spend what you borrowed in other places and get a return, 3%, 4%, 5%, whatever, that's free money, free. If the yen starts to go up, then that reduces that trade's productivity, that profit. People start to unwind that trade. People that are leveraged, we know how leverage unwinds, they get whacked. So when you say, okay, well, what did that unwind look like? Well, we're starting to see it. So the unwinding of the yen carry trade is obviously having significant effects on global financial markets because investors are pulling out of those trades. So they sell off assets like U.S. stocks, bonds, corporate mostly, equities and stuff, which lead to market volatility and a decrease in global liquidity. The other thing is when these unwinds happen, it's predominantly in the areas where they made the most money, which tech and AI. Make sense? Okay, so as investors are pulling out, they sell off their stocks, they sell off their bonds. They may sell some government debt, but it's mostly corporate debt and stuff like that, which leads to other people unwinding. And it contributes to declines in all the stock indexes, which is definitely what we saw yesterday, which is the Nikkei got destroyed. And so that had other markets kind of unwinding and being destroyed. And remember, in these traditional markets, you have different levels of leverage in different ways, but you still have leverage, and that unwind takes some time. It's not a one-day thing. Sometimes it happens like over weeks and months. Anyway, so the question is why just now, right now? Like, why right now? So the unwind is happening at a time when the global economy, because remember, everything's connected, faces a lot of recessionary pressure, mostly just admitting that we're in a recession. So as the BOJ, the Bank of Japan, raises rates to combat inflation and stabilize the yen, and again, you would think, wait a minute, raising rates to combat inflation, has that ever? Nope, never mind. Don't even worry about that. In the Bank of Japan's mind, the recession is playing second fiddle to inflation. So anyway, they're raising rates to combat inflation to stabilize the yen. Other central banks like the Federal Reserve are considering rate cuts. Other central banks everywhere else are cutting rates because they're not as effing stupid as the Fed. So, and again, forget the fact that rate cuts don't matter. But the point is they think they matter. And if they think they matter and they're not doing them, that means that even on the thing that they think that matters that doesn't work, they're not even doing that. That's how asleep at the wheel they are. So this divergence in monetary policies is kind of unusual, and it's added to the complexity of the current financial landscape, which is a doozy. So in summary, the yen carry trade is kind of a strategy that has been used due to Japan's low interest rates, and it allows investors to profit from higher yields elsewhere. But when the Bank of Japan raised rates while other economies face recession, the trade becomes less interesting, less profitable, less serviceable, and it leads to a big unwind. And that shift is causing a bunch of volatility in global markets. And remember, when things collapse or crash, everything's correlated. One. So, the yen carry trade, why I think it's important is because we may look back and say that's what broke the world's financial markets, right? This idea of this yen carry trade strategy, which has been going on for years again, where investors borrow money at a low interest rate currency. Again, if you guys saw the children's book that we did a little while ago, you already understand all of this. Anyway, so if you're borrowing a low interest rate currency, in this case, the yen, and invest in assets denominated in higher yielding currencies, then you profit. So essentially the key components are borrow in yen, invest in high yield asset, and then kind of manage currency risk. So you borrow it, investors take advantage of Japan's like forever low rates, close to zero, to borrow funds cheaply. You can basically borrow for zero. Like, give me some money. Cool. What do you need? Nothing? No, just take it. All right, cool. Just promise to give it back. Got you. It's better than negative interest rates, right? Then you invest in higher yielding assets. So the borrower of yen is converted into other currencies to invest in assets that offer higher returns. So imagine borrowing some crypto, swapping it to something else that earns a higher return, collecting that higher return. In this case, they're just doing it with US treasuries and bonds, equities, emerging market investments, whatever. Depends on how much risk you want to take with your zero fee borrowed money. And essentially what guarantees the success of it is that the carry trade depends on the stable exchange rates, right? So if the yen appreciates against the currency of the invested assets, the cost of repaying the borrowed yen increases, and that could erase your profits. And as it gets closer to erasing your profits, you unwind. And, why was the trade so popular? Why did so many people do it? Because an idiot could do it. Japan's low interest rates made it cheap to borrow money, yen currency, compared to other currencies, and it allowed just about anybody who wanted to go borrow yen and swap it and go make money off of it for literally free. And a bunch of investors were amplifying their returns using borrowed funds with a bunch of increased leverage, which again also increases the unwind risk. So historically, the yen has been very stable, it's been predictably stable, and the Japanese government wanted it that way. They would have constant liquid markets. It's like they were until they weren't, but then what happened? These things unwind, and so when the magic money machine repriced yen, essentially, right, through restrictive rates, you get market volatility, currency appreciation, global liquidity crunch, impact on emerging markets, broader economic implications, which we've started to see even in the crypto space, right? So as the BOJ raises their rates, still we have to say continues because we don't know where this will stop. The cost of borrowing yen increases. It makes the carry trade less attractive. Investors, especially those with leverage, rush to unwind their positions, leading to significant sell-offs, leading to market crashes, leading to more people unwinding, currency appreciation. So when you unwind all these carry trades, there's a surge in yen demand. And as there's a surge in yen demand, a bunch of investors want to buy back their yen to repay their loans. This appreciation can harm Japanese exporters by making their goods more expensive, meaning they're less competitive. So exporters are like, haunch you, you're screwing us. You're haunching us, every one of us, in the immortal words of Yuki. So then comes the global liquidity crunch. The repatriation of funds to Japan from all these investments abroad reduces liquidity in other markets. It leads to tightening credit conditions, increased volatility. Emerging markets that have benefited from inflows of capital to carry trades, they are now experiencing capital outflows, which is not good. That leads to currency depreciation and financial instability and weird economic import-export imbalances, which have obviously broader economic implications. So you have the unwinding of the carry trade, which signals a shift in investor sentiment from risk-taking to risk aversion. And that potentially exacerbates economic slowdowns. People stop spending. They clutch their pearls. They're not, no, I'm not going to buy that. I'm not going to, Matilda, don't buy that purse. You remember Yuki? We just got haunched. We've all been haunched. So if the global economy is already facing, pressure and slowdown and recessionary pressure, this is not good. And this may have ended up being the straw that broke the magic money machine's back, right? Yuki knew it. We've all been haunched. So the yen carry trade is a very powerful financial strategy that was driven by interest rate differentials, a big gap, and free lending for a long time, and relatively stable currency environments. However, its unwinding can have very far-reaching secondary and tertiary and quaternary. I don't know what fourth is. Implications, knock-on effects, and it leads to increased volatility, liquidity changes, big problems in credit availability and financing. It's important to see how all these things can kind of be connected. So, quaternary. That's extraordinary, Mary. You're welcome. You're welcome, all of you. You can use that if you want. Tertiary for anything after secondary. Well, Mary said quaternary. And that's very contrarian to what you just said. So I don't know. But you know what? Miniary. What would Yuki do? Yuki would tell us to go. Yuki would tell, damn it, Mary. Damn you. I was counting on that. I was banking on you. I was in your corner. You know what? You haunched me, Mary. You haunched me. All right. So there you go. There's a little bit better understanding for those of you that didn't get the in-depth children's book version of it and wanted a more mainstream dummy version. I gave you the other version as well. Okay. Stay in school. Don't do drugs. Don't do anything my poor insolvent drunk strung on meth grandmother or Yuki wouldn't do with the magic money machine, or Brandon, who's probably wearing, that's probably hot there still, short sleeve, 164 degrees. I don't know. Anyway, we'll see you guys tomorrow. And hopefully, fingers crossed, maybe we'll have a date for Twin. I think we'll have a date this week for the launch. We'll have a date this week for the launch. I feel like Twin Protocol. Yeah. Yay. Amazing. And I'm